Okay, welcome everybody to Wall Street Reporter's next Super Stock live stream. We are back with First Energy Metals, FEMFF, FE on the CSC, and we have with us Craig Alford, the geologist, and Gurm Sangha, the CEO. Gentlemen, welcome.
Hey, good afternoon.
Absolutely. Gurm, we're going to have to get your camera working one of these days, but at least we're going to hear your voice.
Definitely.
So we'll get the full story. Hopefully, we'll have time to open up for some audience questions and all that good stuff. So again, the main thing for anybody just tuning in, one of the things that we're always looking for on our next Super Stock program is those companies which have three things going for them. One is they're going after massive multi-billion-dollar market opportunities. They're at a key inflection point, and there are multiple catalysts to ignite that increase in shareholder value. But very significantly, it's important to be part of a major investment theme or part of a major trend. So whether it was like a couple of years back, we had, of course, the cannabis investment theme. Then we had psychedelics, and then we had augmented reality. We've had different health tech, and lithium is or battery metals, energy metals, electric vehicles. This really is this theme is going to be with us for quite a while because we're still in just the very, very early stages of essentially the electrification of the automobile. I mean, it's a massive, massive transformation of our society, and of course, everybody needs the batteries. They need the batteries to get into the electric cars, and they need the lithium for these batteries. And lithium prices have increased. Guys, correct me if I'm wrong. Is it up 10x in the last 18 months?
In 1 year, it's been over 10 times. Since we last spoke, the price has again gone up another $2,000, $3,000.
Yeah, about another 10% or 15%.
Yeah,
and that's in a week. In a week.
Yeah,
well, but last month you can call it. It's gone up. So
okay.
But I think the issue right now too is also supply chain area. China has done a great job of grabbing anywhere it can. Australia. I know there's an exploration program now. My old company, Zijin, in the DRC. They're grabbing assets in Argentina. So this is a real concern for domestic car makers within the U.S., within North America, that we need a North American-based supply. So it's
this is the interesting thing is that all the main the auto manufacturers for electric vehicles are in the U.S., North America. I mean, outside of China. I mean, China is its own kind of universe. The U.S. I think is still. It's one of the, maybe China might have overtaken their domestic market. Might be bigger for cars than the U.S. North America is a massive market for automobiles, and now it's switching to EVs. And of course, we need to have a domestic supply. This just from the supply chain issue, and we've seen how important supply chains are in the last year or so. And of course, your lithium project, is right here in North America, in Quebec, but also Ontario. You just picked up a property in Ontario. We haven't talked too much about, right?
No, we haven't talked too much about that. It's at a fairly early stage. However, lithium was identified there. So, you can't sit on the fence right now when it comes to, here's an interesting area that has lithium pegmatites. We grabbed it. So you have to act a little fast. Otherwise, there's going to be very little left.
Yeah, a lot of ground's been staked in that area in Ontario and other areas that were previously unexplored in Ontario. So I think that, to your point, Jack, it's all about a macro level. It's the supply. The supply is basically perspective is the key. So it's a perpetual deficit. Like right now, we're probably looking at 100,000 tons a year that we're as of use just today's market and today's EV penetration rates and whatnot. So in the US, that's about 4%. In Europe, it's a lot higher. It's around 15%. and that's expected to grow as by 2030, we're looking at a 30% penetration rate of EV.
Well, by 2030, a lot of the major domestic car manufacturers are saying they're going to be all electric. So
right.
We'll see if that comes to pass, but I think it's going to come sooner than later. I mean, in Europe and in China, we've already seen market penetration of EV up to 20% beyond. So here, the domestic market still has not taken hold, but it's in a lot of ways. I mean, there's some public aspect of it, like when one shows up in a neighborhood, the neighbors will say, it's probably time to switch to electric. And people are going to get fed up pretty soon with the gas prices too.
Right. So yeah, I think a lot of the manufacturers are saying they're basically putting out their last, gas-powered engines cars in the next few years. I think even Lamborghini. I think Lamborghini is making, and you would think that's like the ultimate, loud.
Yeah.
But they're basically saying they're going to all electric in 2 years, I believe, in 1 or 2 years. So it's going to be all electric, and I think that's kind of the leading edge. I mean, like, and everybody's going to want, everybody's going to want to do that, of course. So anybody who wants to buy a Lamborghini in 2 years with the electric power, they need to, buy FE today to be able to get that car in 2 years. That's electric.
Even Toyota, as a larger, manufacturer, if you will, they're investing $70 billion into that space. GM is no longer investing into the internal combustion engines, like the research R&D departments. So the change is happening. It's just a question of how it's going to actually manifest to reality, because the demand is going to be exponential, where the response is linear when it comes to the actual increasing of the lithium that's being mined. So right now we're at 500,000 tons a year, but to grow that substantially, I think it's going to require a lot of domestic supply. Can't rely on.
Okay, and this is where First Energy comes in. So let's talk about some of the recent drill results. So the whole idea is, I mean, I don't know, in terms of, should we first, to give people maybe like a quick recap of the project that you have for anybody that's new, and then we'll kind of go into some of the recent drill results and and the progress that you're making, how, and kind of the progress towards getting a resource, getting some value here. And I think, Craig, last time you were on, you said that this potentially could be a 20x upside if the resource is what you think it is.
Yeah, I mean, we're still pre-resource, and as I mentioned to the listeners, that we have to go through what's called a 43101 compliant exercise of drilling very methodological in even spaced manner, so that we can build our resource in a compliant manner. But having said that, I mean, we look upon the previous work, which was still, we haven't caught up to some of what they did. They examined an area that was nearly 1 kilometer long, so that's like 0.6 miles for the U.S. investors, and that's very similar in physical size to projects we've seen nearby that have nearly 20 million tons of lithium. And another thing for viewers and listeners, that when you look at our results, you see 1% often. That doesn't seem like a very big number. In terms of gold is often given in grams per ton or parts per million, and 1% is actually 10,000 grams per ton or 10,000 parts per million. So that would be a whoppingly huge number in gold. You don't see numbers like that. So for lithium, it's often based in a percent. So a good metric, a mental metric, is 1 ton would actually give 10 kilograms of lithium dioxide, or what basically like a Tesla T3 model takes 22 pounds, 10 kilograms of lithium for it. So it'd be 1 ton of rock per 1 car. So hopefully we
okay. And how much?
Get 20 million or more.
Okay. So Craig, so you just mentioned that the projects that are nearby, that are surround your project,
Yeah.
in other words, the comps, in terms of the comps, for anybody that's, hopefully we're going to have some, mining people on here that will ask some questions about this. But in terms of just comps, for the layman, projects very similar to yours, they have 20, they actually, starting with this, the same size area, they've been able to develop a resource of 20 million tons of lithium, right?
Mm-hmm. Yeah.
How much is that worth? What's the value of that 20 million
tons?
Oh,
okay. You asked me that last time, and there was a recent, now the value is very interesting because 2 years ago, if you did your valuation, you'd get a very big different number. It would be a tenth. So now the value of lithium products are so much higher. You come out in the billions of dollars for such a project. I believe a project in Ghana with about 20 million tons resource, they estimated production values about 3.8 billion. So these are multi-billion-dollar resources now.
Okay.
And,
so potentially,
that's not even today's prices. That's still
okay. So potentially, this could be worth, several $billion, the resource that you have.
Exactly.
If it pans out to be, similar to what you have, what your neighbors have.
Yeah.
Based on, and we have, and essentially, and we'll go into some of the drill results. Will give us, the details there, but kind of based on the data that you have, what would the odds are? Obviously you can't say. I don't think you can say it, right? You can't say what the odds are. 34%. You can't say.
Unfortunately,
professional geologist. Right.
People should realize we're at a fairly early stage. We're pre-resource, but the good news here is we've consistently encountered a mineralized pegmatitic body that is the desirable object we're looking for. Okay. So it's a matter of how big it is. So
you've had no negative surprises in your drilling?
No. In fact, for the most part, we've done better than the previous drill efforts. In terms of widths, grades, we've typically improved the drillings, which was, by the way, quite a number of years ago in the 50s. So I'm not even quite sure of the analytical differences today versus then, but we're going to keep drilling, and this thing hopefully is going to get bigger. I mentioned before that we have a geophysical program designed for about a 7-kilometer strike length because we see the lithium showings along a structure that runs roughly east-west. And so that's about 4.5 miles long. So that's a huge target, and we're seeing lithium all along that target. So we're hoping to see how we can connect those dots, and hopefully in a big way connect those dots.
Okay, so yes, and we'll go through some of the recent drill results, but just maybe to answer some of the audience questions. So in terms of the goal here, essentially, is to get a resource. You're not actually going to go into production, right? You're essentially, the idea is you get the resource, you create the value, and then it's sold off, to a larger mining company. Is that the idea?
Well, yeah. Gurm, do you want to talk?
Sure, I can
mention it's likely that someone's going to come along and buy us out.
Because we're geographically in Quebec, where we're located, there are 2 properties in our immediate vicinity that are much further advanced than us, and our resource would be a bolt-on for basically any company that's going to production there. There's a processing facility that's being refurbished and built, NAL. If anybody you can feel free to look that up. It was previously had produced in the past, and that's within 10 kilometers within us. And there's one major company that's Australian based that holds all those resources and has a partnership with the government of Quebec to put that back into production and to have its and to our point where we discussed earlier when we began the interview, it's all about having production and processing here in North America versus elsewhere. So that's what's kind of moving towards, and it's not going to be like for us where we need to raise 300 million or 500 million for a mine to build a mine. That's not something we'll be doing. Our idea is to prove the resource to a point maybe do some metallurgy work just to prove the economics of it. It's a well-known area in Quebec, so I don't think there's going to be too much in terms of challenges there. And then we'll see what we can, what kind of value we can receive for the property in terms of a multiple.
Okay, but so it's interesting what you just mentioned, Gurm, is that essentially you're kind of in this strategic location where it kind of makes you compelling buyout for your neighbors, who, as you said, it would be a good bolt-on because they already have the processing facilities, everything there. So this would just essentially expand. They would have a lot of leverage. This would give them a lot of side leverage.
It would just increase their economics substantially, and I guess the question really becomes, is to Craig's point, is how big we can build the resource out ourselves. Of course, the bigger we can build it, the better value we'll get. And if we sell now, for instance, the value isn't going to be very high, just based on the fact that we haven't completed our technical report and/or metallurgy work on the property.
Yeah, and that the project he's talking about is less than 2 miles away. It's very close. They're our neighbors. So Val-d'Or itself, the town that we're quite close to, is a hub of mines. I mean, anyone who might look up the Operation Agricole has the Malartic gold mine. There's a plethora of mines and production and mining expertise in the area. So it's a fantastic region to be exploring in to begin with.
Okay, so you've mentioned. Okay, so again, we'll go through some of these recent drill results. Now, Craig, you mentioned something which is very important, that you've had no downside surprises in the drilling so far. Some of them have been actually better than what you expected. So let's. So I think should we just pull up some of the recent news and we'll go through the drill results one by one in case anybody has questions.
Okay.
I can do. Hang on a second. Let me just add this over here and. Excuse me. Okay, so. You want to, Craig? You want to start off with the latest one? I think it was Tuesday, right? The 25th.
Yeah. Yeah.
What, the 6 meter result?
This is the 5.2 meters. Yes. Actually, maybe just for some perspective, maybe you can kind of say, okay, like what's kind of the game plan and how far along are you? And when what can investors expect in terms of when can they see some sort of impact on the valuation as as a result of the drilling?
Okay, well, I mean, every drill results adds to the story for us. I mean, we never know what we're going to get. Every project has a length, a width, and a depth. So we have not yet really drilled this thing out to depth very far. We don't know if it's widening to depth or perhaps east or west of us. It looks to be wider around the projects, or I should say the showings that were slightly west of Augustus. So that'll be a very interesting phase 2 work program when we get over there, where we find the pegmatites a little wider. Right now we're seeing fairly consistent widths of around 17, 20 feet up to, in some cases, 60 feet in width. So, these are mineable widths. So people shouldn't close their mind to maybe they're expecting more at this point in time. But if you go and take a look at Piedmont Lithium, one of the more successful US-based lithium firms, this is typical of what their drill results look like.
So okay, so Craig, you're saying so what you're getting so far, your initial drill results, you're saying is similar to what Piedmont gets on their project.
The project in the Carolinas they've got, which is their flagship property, often it's almost identical what we're seeing here, what they get. And to also repeat, Piedmont Lithium is in the area. They've partnered with Sayona on the projects that are both to the west and east of us that we previously mentioned that are around the 20 million ton level. So they're a big player, and they're hungry to do deals within the region. So once I'm sure the people at Piedmont were on their radar. As I say, we're only 2 miles away from them, and we're getting consistent drill results, consistent good ore grade of 1% approximately, and with mineable widths. So, we hope to keep this up, and we hope to see what this is like. Our resource is obviously based upon depth as well, and the deeper we can still see our mineralized area, the better. So our drill program right now is really based upon more the strike length, that we'll step out consistently east-west and build. But we haven't really started saying, okay, let's go to 300 meters. Let's go to 400 meters. We haven't done that yet.
Okay, so the drill. Okay, so how deep have you've drilled? You've drilled almost 300 meters, though, right?
Well, the most around 200.
Okay, but this says 292 drill depth, right?
The maximum, yeah, so far.
Oh, I see. Got it. Okay,
yeah, it was only one. I mean, typically, you have an estimation of how your target's sitting, if it's steeply dipping, how to hit it, and then you choose. If you want a resource, you have to maybe drill that at a shallow depth, maybe 100 feet, and then you want to drill at 200 feet, 300 feet, 400 feet, to get the whole picture. But for this first phase of drilling, it was successful at continually hitting a target. And the second phase of drilling, right now, the drill actually was investigating a new target, of the one that we didn't look at with the first phase, that was to the south of us, called Valor. But the results you see that are coming in right now are still from the first phase of drilling.
Okay, so I'm trying to read between the lines of what you and Gurm have been saying, but it seems to me, Craig, based on you're saying that essentially the drill results you're getting in your exploration, again, you're not a mine, you're doing exploration, is very similar to what Piedmont is getting on their properties, which they're mining, right? And they're already in your neighborhood. They're 2 kilometers away from you, right?
They're 3 kilometers, 1.8 miles or something. I
so
don't know. Often we work in kilometers. Typically, it's so much easier. But
it's a quick walk. It's basically it's a brisk walk of about 30 minutes.
If you're building a production facility and there's something within the radius of 10 miles, then it's logical to try to draw that in to the one production facility. Otherwise, the costs of production are quite high. The cost of building that kind of infrastructure is quite high, so in the hundreds of millions of dollars.
Essentially, so what I think Gurm kind of alluded to earlier is that basically this would be a very compelling acquisition for Piedmont at some point once you have a little bit more drill results, right? Yeah. Okay.
I mean, we've scratched the surface, just in terms of, as I mentioned, the lateral exploration. It was about half of the original target that we've covered only so far. So the original target was about 825 meters long, and we've only investigated about half of that with phase 1.
Okay. So it's a pretty interesting strategy. You're kind of you have this project which is right there in a strategic location in the path of, I guess, in a real estate development term, like in the path of progress, where you see that people are starting to build in that area. You have this thing where it kind of it makes it almost like what is it like? I'm trying, like, as a metaphor, I would use, like, in the, like, okay, in Manhattan, let's say, right? You used to have these small buildings, these 3-story buildings, and everybody's they were knocking those down to build skyscrapers, right? So when you had somebody who had this 3-story building that might have been worth, I don't know, whatever, let's call it, $100,000, all of a sudden, it becomes very valuable because now that land, because it's in the path of this guy basically putting up a skyscraper that could be worth, $1 billion. So it's a, it makes, these, I think they used to be called holdouts, these guys, they would try to hold out for a very high price,
Right.
until somebody made them this offer they couldn't refuse. So essentially, you're kind of in that position, in a very similar position.
I just want to say it's a very good point. In business, they always say location, location, location. They say it in real estate. Well, it's also true in mining. You cannot be way out in the boonies simply because the development costs are tripled, quadrupled as you have to build roads, power, all the infrastructure. Even if you have to fly in, fly out, your personnel, all the costs add up. If you can drive to it, if it's near a rail line, if it's near water, it's much, much better. And if you're near a mine, well, then of the same type, if you're a gold explorer and there's a gold mine next door, it's a no-brainer that you're in a better location. Well, we have a lithium mine next door, and it's going to be partly operated by a very powerful group from the U.S., Piedmont. And so we feel like we're in the right location. And as with respect to a holdout, well, the value of our company isn't so great right now. So it's a good time for investors. And we hope to bring value to them, in many ways. But obviously, we're more valuable in building a resource right next to a mine than if we were out God knows where. So this is a great spot to be in right now. I hope that Piedmont's paying attention to us, maybe others. I mean, Piedmont's, I believe Tesla signed a deal with them for offtake already. So that's what's happening too, is you're going to see, GM have to do this. You're going to see Ford have to do this. Where are you going to get your supply contracts? And you're going to have to rush in.
They have to. They really have. I think at this point, like if we were having this conversation, let's say, 2 years ago, it wouldn't matter where they get the lithium from. Today, the supply chain, where the stuff is, how close is it to you, is extremely, that's something people think about. Yeah. So, so they really do need to have, I think, for the U.S. manufacturers. So for two reasons, they want to have the lithium nearby in North America because, obviously there's cost savings. They don't want to have to deal with the supply chain. And the other thing is, we've talked about before, China is monopolizing lithium, production worldwide. So they're really, and their focus is on their domestic market and, or to squeeze the prices for anybody else. So it really makes, essentially all these kind of macro forces make this very compelling. Okay, so one thing you mentioned is, so Piedmont, and I don't want to focus. I mean, the interview is really about First Energy. It's not about Piedmont, but it kind of is about, because essentially part of the play is that you're in the kind of, I'm using this real estate word. It's not is there a mining word that's similar? Path.
Well, we're in their sandbox. Let's put it that way.
Hold out. Okay.
They're playing right next door to us. As I said, it's 2 miles away. And, as we develop some level of cooperation between the two companies would be, feasible, or it would make the most sense. Unless, of course, another big player comes along. But if you're going to spend hundreds of millions of dollars to build a production facility to operate a mine, then, you're going to want other resources in the area.
Basically.
So the main thing again is the having this production facility there that Piedmont has. It makes it very compelling for them to want to really maximize and get the most bang for the buck that they can get out of it.
Precisely. Yeah.
So if they have so if they could pick up your project, and again, you're getting the drill results you're getting are very similar to theirs. It's the same kind of sandbox, if you refer to it. It's right there. The geology can't be that much different.
I look at the some of the early drilling for the project's called Authier, Authier. That's to the west of us, and we're almost a carbon copy of that right now, with in terms of our strike length, our widths, our grades. So, it's quite possible that there's numerous of these size of deposits around this area, and collectively it would make this region a very powerful region for lithium. So
you're like the Saudi Arabia of lithium, basically.
Well, I was trying to coin a phrase, the lithium rectangle, because the area is kind of more rectangular, whereas you have a big a triangle down in South America. They call it the lithium triangle, with Bolivia, Argentina, and Chile. But so I was trying to coin the lithium rectangle in Quebec here.
Okay, let's get to some audience questions here. Excuse me. Maury's asking, how far are you from a potential buyout if there is one? Okay, so in other words, what would you need? Because okay, so if we're all kind of read between the lines, that the idea is, okay, you get X amount of results, you make this extremely compelling, and somebody will want to buy you out at $10 a share, whatever the number is, right? So how far are you from that day?
Gurm, do you want to take this one?
Yeah, sure. I can speak to that a bit. We'll have to, as we mentioned earlier, we'll have to complete our technical report, which is the 43-101 report, and complete our metallurgy. Realistically, I mean, we need to increase our drilling. So I would think we would need the bulk of this year till kind of like the fall to winter to complete our drilling and our metallurgy, and then we'd be in a good spot probably later this year into next year to look into options when it comes to potential suitors, and we can send them enough information that we have on the property that's all compliant to today's standards.
Okay, but so in other words, like in roughly 12 months, you're going to be at the stage where there could be
we want to start shopping it around in about 12 months.
In about 12 months, okay.
Yeah, we have
that. Meanwhile, though, but the value, but here's the thing. But in the meanwhile, between now and 12 months from now, the value of the asset could increase dramatically based on more. In other words, right now you're not valued as a 43-101. It's the value is what, $15 million. In other words, the market cap today is what, $15 million, right? And if you think, I mean, let's say if you think that, in other words, to get to a 43-101, how much would this be worth?
Well, I think, quite honestly, I alluded to another company. The company's called Atlantic Lithium. I would tell investors to take a look at it. They have a resource of 21 million tons, and their life of mine revenues are estimated to be 3.4 billion on their latest scoping study that they've done. So that just gives an investor the sort of mental worth of something that's 21 million tons in size, which is.
And what's what's the market cap? What's their market cap?
That's a good question. I think they're ahead of us on that. It's about nearly 300 million.
Oh, okay. Actually, I should have looked.
But there's projects in Ghana, Africa. Yes. So often you don't get the bang for your buck when you're working in, countries that, Ghana's a good mining country. I've looked at projects there, but again, if you've got it in US or Canada, you get much more bang for your buck.
Okay, so basically, their market value, right? I'm looking at is north of 200 million Canadian, right? And they have essentially something which is very similar to what you expect to ultimately end up with in 12 months when you have the 43-101. That's kind of the thesis, is that you're going to have that type of resource. And there are 200 million. They're not a producer yet, right? They're not producing.
No.
Yeah. It's same exact setup. So just for, again, so they're exploration company. They're not a producer, but they've got to the resource stage. The market's valuing it at 200 million plus, and that's in Africa. That's like in the middle of nowhere. I mean, literally nowhere. I mean, it's you got to cross an ocean. Nearby there are shooting wars every so often, right? You have China, that's kind of
let's just say that
muscling
they're far from a manufacturing facility.
right. They're very far from an EV manufacturer.
Right.
Whereas when they're in Quebec or in Ontario, I think you actually do have there's manufacturers in Ontario, right? Auto manufacturers.
And I know there's
Detroit is right across the water.
Well, there's a large facility to go into Michigan, and I think GM that has a plant in Southern Ontario. They're also going.
Yeah, that's
going to be building all electric.
So
that's not far away.
You have any comments on this Millennial? What is Millennial doing? I'm not familiar with. Is it a similar thing where it's a?
No, I think that's a brine deposit. That's not related to where we are in South America.
Okay.
Hard rock.
Okay. Now, is that how? Okay? So from what I understand, there's different types of lithium, right? You have this brine. You have what are the differences, and which one is the more kind of
Sure. I think I said before there's three major types: brines, clays, and hard rock. Right now, hard rock is mined just as you mine gold, just as you mine nickel, where you crush it, you grind it, you get a concentrate, and it moves on. And brine deposits are typically mined in a rather odd way, which is you pump up the brine, which is simply salty water, and you evaporate the water, leaving behind a residue that is concentrated now, and you can mix it with calcium carbonate and create a lithium carbonate from that. And the clay deposits, unfortunately, you have to do a lot of acid dilution on them to get the lithium out of the clays. It sort of bonds a little stronger. So even though we're working towards a green economy, that's not a very green methodology. Neither is the evaporating all that water. So people are working on sort of direct extraction from brines. The technology is getting better at that, but still in Argentina, Chile, they basically pump the brines out onto surface in huge football field size areas and let the waters evaporate.
Okay. And you're doing basically hard rock extraction.
Yeah. And right now, today, hard rock represents the largest majority of lithium supply to the market.
Okay.
Primarily from Australia.
Okay.
From southwestern Australia.
Okay. Which one is, like, in terms of costs of production, which is, give us some comparisons between the three.
Cost per ton for the brine methodology is a little bit better, but it's very variable. I mean, if you have different seasons, your evaporation rates vary.
Time is the problem there.
Yeah, it can take months. And if you were to find a brine at a low altitude, well, the evaporation rates are very poor. I mean, we have to remember.
They're relying on the sun, basically.
Right. They're relying on the sun, and they're also relying upon it's a very dry climate. I used to work in Chile and Argentina, and you're up at 12,000 feet elevation. It's extremely dry there, and the evaporation rates are good. So it's not very applicable to other areas of the world where it just wouldn't work. You couldn't evaporate. It would take you months to get your pond evaporated.
Okay, but now does, in terms of the market, does so in other words, but the end result, is the lithium the same, the one that's from the brine, or versus hard rock, or versus
hard rock tends to ship a concentrate that's further down the road extracted for either hydroxide or carbonates. Whereas the brine typically is a little bit easier to lend itself into creating a lithium carbonate.
Okay. So the brine, what's the, in terms of price wise, what's the difference, like a premium, a discount?
Well, I just want to say that currently the lithium pegmatite value has actually gone up better than lithium carbonate. So the lithium concentrate from hard rock has actually seen a greater increase in value, and that's astounding considering how much the lithium carbonate prices have gone up. As I mentioned, over 10 times
but it's not. I don't think it's. But it's. But there's so much demand right now that it doesn't kind of at the end of the day. I don't think does it really matter to somebody where. I mean, it's they just need the lithium.
Right. Exactly. That's very true. And I guess you could say though that a hard rock mine can deliver at a fairly constant rate because it can adequately know month to month how many tons it's going to process, how many tons it's going to produce for any consumer.
Okay, versus the other the brine, it depends on the weather essentially.
Yeah, you basically get better results in the summer than you do in the winters and stuff like that. So it can go up and down. And also, I just want to say there has been backlash already in Chile regarding why are we wasting all this fresh water? Why are you letting it evaporate into the atmosphere? We need that water for humankind as well as agriculture. So
yeah. Oh, so they're competing. Oh, so they're competing with that water in terms of Chile actually is a big agricultural producer.
Yeah. Yeah, they're wonderful wine producers.
Wines, right?
Yeah. So I used to drink fantastic wines there.
Yeah. So basically, I don't know. Okay. So in terms of, do they have a water shortage there? Or the water is.
Oh yeah. I mean, they have the driest place on earth, the Atacama Desert there, and a lot of the lithium producers are just to the south of that.
Okay.
It's extremely dry, and they have to build desalination plants to get fresh water.
Okay, so in other words, producing the price of lithium, there's a lot of upward pressure because I think the brine guys are going to run into issues at some point, which are going to force up their cost of production in terms of water issues, etc.
Yeah.
And of course, there's more. So there's a lot of tailwinds that are bullish for what you're doing. Okay. So to recap, bottom line is the goal here is to get a 43101 resource in the next 12 months, which potentially is worth a couple $100 million, similar to we've seen comps. You've mentioned a couple of comps already.
Yeah.
And again, the location you're in is it's a strategic location where there's already a processing facility, literally next door, literally.
Yeah.
There's producers in that area, so everything is kind of lined up here. Their drill results you're getting are similar to the neighbors who are, what is it, Piedmont, which is, $1 billion company already. So, basically,
there's a lot of favorable wins, and in fact, I mentioned also the Quebec government is very lithium friendly, very mine friendly. So. Year after year, Quebec is always within the top 6 mining jurisdictions in the world. So, we've got a lot of favorability there. We don't have any native issues as well, native land claim issues. So that's very good to get a mine, green lit for production within a reasonable time frame. So I think the next year for First Energy is going to be very transformative. We're going to go from basically explorers to a resource holder.
Okay, so that's the theme for. Excuse me. Correct. I'm fighting with a little bit of a cold here.
Me too. I'm fighting back.
20. I hope it's not the Omicron. The Omicron is going around. Yeah. Okay, so 22 is the year. The theme is the year of transformation. For First Energy, and what we could expect to see essentially is the value of the project and essentially the stock should stair step. But is it going to stair step in direct proportion, or when can we see a jump? Because I think anybody watching this, they're probably asking, when is this thing going to go? Going to go to like 5x at least. At least $1.
Well, Gurm, you could speak to this too.
Sure.
Sometimes it's literally eyes on the stock, public awareness of what's happening in the area. Sometimes people come out of the blue and go, "Oh my God, look at these guys! Look at this fantastic." Sometimes it's literally one drill hole that'll grab attention for the market. we've had some definite interest in Canadian investment institutions, and little by little, we're building the story.
Gurm, did you want to add something?
Yeah, I mean, in terms of, I don't think there's any one particular metric you can point to. And like Craig said, it's just a matter of at any one time we could get the interest we're looking for based on how things are progressing on a macro level. So it's not going to be like it has to be the technical report or something to that effect that's going to give us the bump. I mean, of course that will, but the way the market's moving, there's a lot of macro trends in our favor, legislation, green economy, a lot of things are happening that at any time we could have the interest we're looking for, and if it's beneficial for shareholders, of course we'll act.
Okay, and okay, so if we went off that comp that you mentioned before for 200 million plus, and which is in Africa, so in theory, something in North America might be worth 400 million, 350,
Yeah, I mean, for me, my head has been typically in the past in gold, and what people value in the ground, say in the U.S., in Nevada, is much higher than you would get even in Canada, and what you get in Africa is often a third of that. So
okay,
people value projects much more heavily within good mining jurisdictions, within good political jurisdictions. So we hope to see a more robust view upon our company.
So potentially, what you have could be worth, let's call 400 million, just based on premium of North America, strategic location next to the production facilities, next to the customers in Detroit, etc. What do you? So that's kind of the end stage at the 43-101. But what do you feel the stock should be worth right now, just based on where you're at? And this is purely your opinion. I mean, I know you're going to say, I don't know what you're going to say. But where do you feel the stock should be trading today?
Well,
based on what you have.
Yeah. Again,
just based on the science.
Yeah. I just want to remind people we are obeying every step along the line for 43-101 compliance, and that it's difficult to speculate, but I'd like to see a 40-cent level be achieved. But again, it's the markets are funny. Often, just recently we had a dip of 900 points in a single day, and then it recovered 400 points in that same day. So the market winds sometimes change rapidly, but little by little, I think investors will start to see the future of automotive industry is electrical, that there's no stopping it. As well, a lot of green energy products like solar and wind will require battery storage. I've seen a lot of plans for large battery storage that require, again, a lot of lithium, even much more lithium than 200 cars goes into some of these battery operations.
It's an interesting point. Right.
Storing electricity there. So there's already, lithium ion batteries are everywhere. Just your phone, your laptop. We're going to see them in cars. So where is the demand going to stop? We don't know. Especially this next decade will be so transformative for the auto industry. And within, the Build Back Better program has cash incentives for people to buy electric vehicles in it, baked into that deal. So we're going to see just public awareness. I think there's been a reluctance in North America to switch over to electric vehicles, but I think that reluctance is going to start falling away as infrastructure is developing for recharging stations, things like this. Within my region, I didn't think there was any recharging stations. Now I found out there's 12, and they were all built, within the last 18 months. So it's all happening. And as our drill results continue, as we build towards a resource, I think it's all going to merge well with the message and the macro level to make First Energy an attractive investment vehicle for people.
Okay, excellent. On that note, Craig, Gurm, I want to thank you guys, and we look forward to the next big drill result.
Okay, have a good weekend.
All right, guys. Cheers.